All right, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So markets are open right now. I'm doing this video Monday, half day, and I talked about this on my channel last week. We'd probably have maybe a small gap down and kind of an inside day, and that does seem to be the case here. We had some news from Tesla over the weekend, so they beat on deliveries, and that's getting a nice bid here. But overall, market's asleep. Not a lot of volume, obviously, so not a lot going on, and that should not affect really anything that happened last week. So anyways, we came up here a few weeks ago, and we talked about, obviously, this kind of level here at 438, 440 on this SPY, and we kind of curled back down, and we got a nice little bid off the 20 moving average, and on Friday, we got a decent pop up. PCE numbers, end of quarter, stuff like that. So PCE came in cooler than expected, and that kind of gave the market a little bit of a lift here. And you can see right now, basically the 20 moving average has held up for now. So markets here basically into this double top setup. Can they push higher? They absolutely can. There's nothing to say that they can't right now. There is still the same kind of red flags out there from a longer term perspective, though. And you guys know about TINA. There is no alternative. There is an alternative now. You take a look at the 1-year yield is higher than the S&P 500 earnings yield, and that's for the first time since really in 2 decades. If we look at the 2-year, that's above the earnings yield as well. So there is an alternative here to stocks, and there is certain red flags like we talked about. Again, we've mentioned this ad nauseum. Breadth, very thin leadership at the top. 7 stocks making the entire rally. He's going to need a lot more catch up from other sectors. You're going to need catch up from financials. You're going to need catch up from energy, which I think can be a thing in the second half of the year. But again, it's a very tech-led rally. We are seeing a slight divergence here, though. Spiders here making highs, and the triple Qs here not making new highs, at least yet. So again, Qs still look pretty exhausted. And again, like we said, it's going to take some work from other sectors to help out here if this rally is going to continue. As far as the levels are concerned right now, again, we're in a double top on the spiders. If you get through that, we'll go back to a weekly. Actually, let's go to the daily again. Our next real big level is right around 450, right? So that's going to be you see that big red bar high there, reversal bar, and it's a whole round number. It's not that far away as well. I believe there was a fake print up there last week into the 453 area, so that could be a potential spot as well. And then if you throw on your fib here, you're going to see 447 is your 75% retrace. So right in that zone, 448, 450, somewhere in that area is going to be the next level for the spiders. And if the double top holds and we come down, really, to take this out, you'd have to go and take out this low here. And then that would open the door for a potentially move down to 420. Obviously, there's this trend line here, which is a longer term trend line. If we get some type of a bigger correction, this is where we would look for the spiders to go here. But those are the levels we're watching right now. Again, there are lots of red flags out there. But right now the markets can move higher based on, on a technical basis. There's nothing to say that they can't take this up outside of breadth being on the weaker side here. Triple Qs, like we talked about. Again, that double top, or we haven't really tested double top yet, but that area is still holding. So 370, we pierced it a few weeks ago. We came down, we curled back up, and, we made a little bit of we had a little bounce off of that, but we're still not above that level, whereas the spiders are. And again, looking here on the weekly, pivot high. If we go to our fib again, you're going to see we went into the 7.5 retrace. So again, same thing there on the Qs, and that's why you're stalling out. Additionally, you look at that 20-week moving average, that's still all the way down at 330. So the Qs are still pretty extended. I think they just need to do a lot of cooling off here. And again, you see that very steep trend line, a much steeper trend line on the Qs that we could potentially go into if we had a bigger corrective move. But markets here are holding up for the most part. And again, it is a holiday week. I don't know how much action we're going to get into next week, as most fund managers are going to come back on Wednesday. And then obviously it's only 3 days from there. So you may see some quiet price action for the most part. But right now markets are hanging in there. again, still lots of red flags. Still have a deeply inverted yield curve. And data is starting to show, labor market's starting to get weaker. We had ISM come out today. That was definitely cooler than expected as well. So some of that data is starting to weaken. Does that kind of play out into the second half of the year? Lots of question marks. Does inflation remain sticky as we get kind of this weakening data? We'll have to, that remains to be seen. But again, right now, markets are hanging in there. And again, those levels are what we need to watch there on the spiders. Anyways, over to the Russell. So IWM, that is up 0.5% today, getting a little bit of bid. The KRE is getting a bid as well, so that helps out the Russell. That can still get to 192, so nothing has really changed on that front, but still Russell in a big, laggard position here. So again, big down move and just sideways really since April of last year, and has not really participated in the bull run that, again, has been led by, again, 7 stocks. So this is going to need to catch up as well if this bull run is going to continue. The Dow here, again, kind of into that similar double top area, short-term double top. And that's through that 343 area that we placed a lot of emphasis on. If you get through 345, then it's simple, right up to double top there at 348. If this were to break down, you'd have to take out that 50 MA around 336, that pivot low. Then you can go back and test 331.45. But outside of that, again, markets are holding up here again. We're in that kind of summer doldrum period. It is a holiday. So let's not make too much out of this price action here. Anyways, let's get over to the semis as always. So semiconductors hanging in there again, same kind of pattern as the Qs, down move, and then we curled back up here. Again, if you take out resistance at 156, then you can go back to all-time high double top there. So at 160. So semiconductors still holding up. They're hanging in there very well. If you take this out, then you go test this area here around 144, 143. Possibly even, a bigger move would take you down to this old trend line here, maybe the 50 moving average. But right now, semi's holding up. NVIDIA getting a bid. AMD had a pretty good correction there, and that has had a nice little bounce off of that little gap fill there. So AMD holding up, and that is kind of helping out the semis there. But semis still hanging in there just fine. IGV, on the other hand, is a little bit on the weaker side here today. It did curl up like everything else, but kind of an outside move down so far, down actually 1% on the day. Oracle, which has been a leader, that is down almost 2%. So that is dragging down the IGV, so a little bit of a laggard there. And again, we talked about tech being very stretched. So some of these names may start to come in here. You had a lot of money pile into them end of quarter. So maybe you start to see some rotation into other sectors. Perhaps not. But again, it's going to take that if this market is going to continue higher here moving forward. All right, over to the Dow Transports here. Dow Transports last week had a decent week. So we talked about, trying to remember, I think I said to you guys 15.2. Last week we talked, and that's where we got, and then we blew through that. So I was updating it throughout the week here, but we got to 15.2, and now we're into kind of this previous trend line. Where does that come from? Right here. So that failed. You had this big breakout bar, inside bar pattern, and it failed. And then guess what? We back tested it once, twice, and now we're doing it again. And we are a little stretched and extended into it. So to me, if we're going to get through that, we probably need to pull back, consolidate, something of that nature. It is pretty good resistance, and we are a little extended going into it. But that is the new level now, 15.6 we'll call it. We're basically sitting there right now. It's 15.627. We're sitting right there right now currently on the DJT, but nice outside move. And again, you're going to need to see this more of this from the market. We look at the Jets, that had a nice bid. Delta's just had a huge run there. So that is helping out the transports. But that's the big level to watch going into this weekend. Next, can we break through it? Do we need to pull back first? And if we do, then the transports can run further. So nice pop there for the DJT. All right, let's get over to bonds here as we kind of talked about a little bit. With that earnings yield, there's the 2-year. This is still holding up. This is kind of the big divergence here that we've, one of them that we mentioned. Stocks going higher here, but the 2 years going higher. My guess is, and I've mentioned this on my channel a bunch of times, this is gonna be the case. The yields can go up with stocks. Where are stocks going to care? It's right here. So if you take out this double top above 5%. That's when you're going to see the market maybe start to panic a little bit because the whole rally, if we go over to the SPX, whole rally has been predicated on, rates coming down. Inflation has peaked, right? Inflation has peaked. The Fed's going to be able to cut rates. Earlier this week, the Fed funds futures dropped their forecast from January 2024 cuts to May 2024. That was based off of jobs data that we had earlier this week. It's not a coincidence that we bottomed March 13th, and then the 2-year topped out on March 9th, right? And came down. And what happened here? What's March 13th? See this red bar? Now let's look at the Fed funds rate. March 9th, we get right there. That was at 4.5. The 2-year broke below the Fed funds rate on March 13th, right? Okay, so it's not a coincidence that this rally in the stock market started when that flipped below the Fed funds rate. If this gets above the Fed funds rate, the Fed paused, remember. It's 5 to 5.25. If this surges through 5%, that's when the market's going to start to look at things and say, whoa, wait a minute. There may be a problem here. But for now, markets are holding up. The Fed is expected to raise 1/4 point. They do need to do that, I think, because they can't afford to pause again. If they do, then they're going to be behind the curve again. But right now, rates holding up. Looks like it wants to go test 5% on the 2-year there. For the 5-year, we had a nice little pop last week. So if we get through this area, next level is 435 to 450. Then the 10-year here, nice consolidation, weekly consolidation as well. Nice pop last week. And you get through 3.8, it's up to 4. 30-year here, a little bit on the softer side, but again, still a decent pop last Wednesday. You get through 4, it's up to 4.2. So rates are still looking strong here, and I wouldn't bet against them right now. But right now, markets, can ignore that for the meantime. So just keep that in mind. All right, let's get over here to housing. XHP, new highs here. So again, XHP, we talked about 78, 79. Got through that to 80. You're into some resistance, though. Let's take a look at that pivot high there. We'll go to a daily. So there's that trend line, and then you kind of violated it a few times. And we're basically right there. So I may need to do a little bit of stalling out, but it's had a nice pop. ITB, new all-time highs. What can you say about the home builders here? New weekly all-time closing highs as well. So through that double top, again, I think one of the probably loftiest sectors out there outside of tech going into the second half of the year. So definitely something on my radar here, but they're holding up, and nothing to say they can't go higher at the moment. I do think they're wildly overvalued currently, but you can't argue with the chart right now. So ITB still holding up. And again, we're down slightly today, but we won't make too much out of that just yet. VNQ having a nice pop last week and getting a decent bid today, up 1% in a half day. Not terrible. You got to get a close above 84. That would be the first time since we got to go all the way back to March 8th. So that would be an interesting close. There would be a close above the 200-day moving average as well. So if that can break above that area, then maybe you can start to work your way up. We talked about 86, maybe even 87.50. So different, a little bit of a change of character there in VNQ. We've been talking about this every week. It's bearish below 84. And if you can get back above that, then it can start to, turn the tides a little bit here. Maybe that's a sector that does need to rotate, to keep this rally going. But VNQ, nice little pop there for being a half day here in the markets and not a lot of volume. Anyways, over to XLF. So again, that's getting a little bit of a bid here. You did get a critical close above the weekly 50 MA, so that's important. Still has a weekly bear flag look, though. I'm not in love with financials right here. The only one I like at all is really JPM. That's the only one I would really even bother owning. That's at 52-week highs right now. But XLF here is still under pressure. Not in weekly time frame. Short term, it's getting a nice pop here, but still not a great weekly pattern there. The KRE is getting a bid today, but last week we talked about this. You close below that green bar. It's just not a good look. Regionals still can't get a bid. They're still unable to get out of their own way. Again, we know commercial real estate's a thing in the second half of the year. I didn't even talk about that as a possible red flag earlier, but something these banks are going to face challenges with. But KRE and then KBE, they're up 1.67% on the day. Again, still not a great look really on any time frame, though. And then broker dealers holding up much better. This can still get to 490, right? So we came down here, curled back to the 200, and then we got a pop. If you take out this high, 490 is your target there on the XBD. All right, let's get over here to energy and commodities. Start off with crude as always. Crude's still in choppy range. I know oil shorts are really, really high right now. We also, I believe the SPR, let me see if I can pull this up for you here. There we go. SPR is at the lowest level since 1983. Hedge funds are also short WTI and a low net exposure to energy stocks. Take a look at that chart there on the SPR. And yeah, it's like they're kind of running out of time, right, to keep this lower. I still think you can have one more push down. I can't rule that out here, especially if you get kind of some type of recession talk really starts to pick up. But I think the second half of the year, we've talked about this a lot, Jason and I. Second half of the year, that's when you're really going to want to own energy. So it's coming here. It's starting to set up. Now, if we don't end up taking out these lows, you could get a pretty good squeeze. So, but right now, you still have to get above this red bar here on the weekly, and then above 82. But right now, it's still just kind of stuck in a range. Nothing has really happened outside of that. But, again, we've talked about this second half of the year. That's going to be the energy trade here. So anyways, over to XLE, that's getting a nice little bit off the lows. Again, still don't love it on the weekly, but it's chopping around. It's holding up. Nothing terrible. XOP had a little trend line breakout last week. So nice little pop there. Again, I'm still not in love with it on the weekly. I still don't like how you're inside of that area, but it's holding up okay. If these can start to make more higher lows, and maybe they bottom before, I think they will. They could still have one more corrective move here, but that still kind of remains to be seen. And then OIH did something nice. So we talked about 280 forever. We closed above that on Friday. So we got above that with a gap. We're actually up 1% today, currently on the OIH. This is the next big level here. It's 292.82. If you're wondering where I got that from, it's this weekly red bar. That high right there. If you get a weekly close above that, then I think OIH has bottomed. So just be aware of that. But right now, still below that. Might need to do some more backing and filling, but it's hanging in there just fine for now. Nat Gas had a nice pop last week. Inside day here today. I like really everything it's doing right now. We talked about the higher lows, higher highs. You're getting up to this $2.80 to $3 area, and now you're just consolidating sideways. No problems there. You push through that, it's $3.50 and $4. So nat gas holding up well. Onto some uranium plays. CCJ, again, nothing's changed here. A little outside day down today, but nothing wrong. You're under that double top, just needs to consolidate there. I don't have any problems with it. Same thing with URNM. Went through that 100 moving average and pulling back. Again, still just needs to do some weekly consolidation. And then this can move higher. I don't see any issues there. Same thing with the ag plays. Not a whole lot going on last week. DBC, little, just kind of a small bounce there. MOS still has that bullish pattern there on the weekly, right? So we hit that big level, the 618, 200 week moving average. You have a little inside bar there on the weekly, so that can push up a little bit. Intrepid, same kind of look. And same thing with NTR. I actually think NTR has got the best pattern out of the bunch here. A nice little pattern there. That can move up, possibly even into that 65 handle. So that has a decent pattern there for an advance. So potash names might be getting a nice little bounce here, but not a whole lot going on here outside of that. All right, let's go look at the dollar index here. And then we'll get over to gold and precious metals. So dollar index sitting at that 103 handle. It had a nice pop on Thursday, came right back in Friday. See this red bar high here at 103.37. That's where it's got to close above on a daily basis. Dollar's actually hanging in there. It's actually getting a nice bid today. It had a pretty good sell-off this morning, came right back. Needs to hold that 50 MA right now on the daily. You need to get above 103.30. The big level, though, and there's still a bigger level here on the weekly, and that's 103.75. If you can close above 103.75 on a weekly close, then you can go higher on the dollar. I think the dollar can really get a bid then. But until then, you still have kind of a weak pattern here, and it can go lower. But right now, I'm still on the neutral side. Maybe it's trying to put like a little cup handle. I don't know. It's definitely appreciating against the yen still. The euro remains strong. Euro has a lot of inflation going on over there, and it's very sticky, as we've seen, and the central bank is being more hawkish. So that's putting pressure on the DXY. But right now, a little bit neutral on it, but those are the levels that I'm watching for it to get over right now. All right, over to gold here. So good old gold here, hitting that 1900 level. What did I tell you guys for months? Said it's got to go to 1900, and it's got a nice little pop off of that. That's a short-term level. For right now, again, hitting that trend line. You got a little bit of a bid off it. Can this continue higher? It certainly can. If it breaks that level, though, then it's down to 1850. It's really that simple. On a daily basis, you want to get above a weekly basis above 1975. On a weekly close, you can go higher. And then obviously below 1900, it's down to 1850. So really simple there for gold. Silver here on the softer side, I still think this needs to test 21, but it's getting a nice pop here. It can get to 2350 right now, and then we'll see how it reacts from there. Platinum here, reacting off that short-term double bottom 900. That may need to go a little bit lower. I've already got some levels worked out on that. Probably in the 800s, so we'll see what we got there, but it should get a short-term bounce here, and then we'll kind of reevaluate it. Palladium also trying to hold that 1200 handle. It had a pretty good sell last week, decent volume on that uptick and a decent candle, but it hasn't done anything since then, so this may need to have one more push down. But of course I am still watching Palladium very closely. It'll just look very attractive down here. Just needs to show me a little bit more. And then copper got all the way down to, guess where, 370. So 370, a little bit of a bid up to 380, hitting the 20 and 50 moving average. I still think that wants to test 340. That's a much better buy level there. All right, over to Bitcoin lastly. So Bitcoin holding up really well. No problems here. This should still get to 32.5. Nothing's changed. Nice bullish inside bar pattern. Weekly. Nice little inside pattern, right? Hit double top. Should still get to 32.5, maybe a slight pierce of that. Bitcoin always overshoots. That's generally how it works. For those of you guys who follow ETH, that should get to 2,000. Maybe a pierce of, we'll say, we're looking at this red bar high. So 2020, maybe 2010, somewhere in that area. Crypto holding up well. Some of the crypto stocks are holding up well as well. I don't see any problems there at the moment. All right, anyways, lastly, over to the spiders here. So market's holding up again. Double top, you get through that. The next big level is 450, whole round number, 75% retrace as well. If we were to correct lower, you take out this low, then it's simple. You're down to 420. Very, very easy, very simple price action here. There is a lot of red flags in the market, though. Again, does it last throughout the summer doldrums? That remains to be seen. Typically, July is a pretty good month for tech. And then August is kind of a float month. That's usually how it works. But we've already had a lot of gains already. There's already a lot of problems out there. Again, one takeaway from this video, please watch that 2-year yield. If that gets above the Fed funds rate, that's where I think you could actually see some actual selling in this market. And maybe the market's starting to get a little bit of jitters here. So anyways, guys, can wrap up here. You guys take care. Have a great holiday weekend. Come find Jason on Patreon. Come find me on carnivoretrades.com. Talk to you all next week.